Oh yeah. Hey, everybody. Hope everyone's doing awesomely well. It is my honor to be here with you guys today for the Fed Day. Let's kick some butt. And what I mean by that is number one, let's focus in on what the charts are telling us going into the Fed decision in about 10 minutes. Is it going to be a pop? Is it going to be a drop? Is it going to be whipsaw action? Let's watch and see where this thing goes. I think the biggest thing to recognize here is number one, it's going to be a 25 basis point hike. That's not in question. The big question is what is the verbiage? What do they say in the statement? And then remember, Jerome Powell has a 2:30 p.m. press conference where he can basically say anything he wants. And what I think is so interesting here is that if we get a big rally on the initial statement, let's say that comes out at 2 o'clock, he may not want that and he may talk it down on the press conference. And he did that once before. The markets were ripping, and I think it was about 3 months ago, and he came out in there and started saying the most hawkish things, and the markets got crushed. So let's be ready for that and just be aware of that. I'm going to take you guys probably to about 2:15. I don't think I'll take you past that point, but we'll set it up. We'll see where things are, and we'll rock and roll. All right, so number one, folks, don't forget to hit the subscribe button on YouTube. Make sure you're following me. This way, any sort of future content, and I'm trying to do content every single day for you guys, you'll be notified because of that, or if I put that out. So make sure you subscribe to the YouTube channel. Obviously, following me on Twitter is a fantastic way to do it as well. Smash that like button. Heck yeah. All right, guys. So let's get right into the charts here. The first thing we're going to look at is the dollar chart, right? So again, bear with me here as we bring in a screen share. I want to do this screen share real quick. And here we go. So here we have a screen share right here, guys. And again, this is the US dollar chart. Now, what's concerning me about this is that there could be a small amount of downside to this level here. But remember, that's a major technical support level. It's not only a daily pivot low here, but if we go to our weekly chart, there's this line here as well. So two lines coexisting together could tell us that the dollar is close to a technical bounce. Okay, so if that's the case, if we're going to see a bounce in the dollar, that is not good for risk assets, and that implies a potential more hawkish Federal Reserve. All right, so that's number one. Next, let's go to the S&P 500. The S&P 500 here still is making lower highs. Here's a high. In fact, let me try to use some of these fun little tools here, see if I can't utilize them. Let's see what we got here. Rectangle. So we have a high right there, lower high, and lower high, and still lower high here, right? So as of now, this would be bearish. Now, a lot of people have come out and said, oh, the new bull market is starting here. I don't buy into that. We haven't even entered the recession yet, technically speaking. And so I don't think there's a lot of fear out there. All right. So again, keep that in mind, is that until proven otherwise, this upsloping trend line to me is a trend line of resistance. Now, if we were to pierce this high, that would get me a little bit more intrigued, but I still wouldn't buy it yet until the Fed gives the green light. And what I always say to people is this, is that always remember, guys, it was all about not fighting the Fed when they were printing money, meaning we should go long and just buy and hold. Now they're not doing that. They're sucking money out of the system. Even if interest rates stay at 5% for the foreseeable future, it still means that money is getting sucked out. There's a lot of interest being paid. That's money out of the system. So it's hard to imagine here how we could see a market that somehow goes back to the all-time highs, in that environment. Now, if the Fed starts lowering interest rates, that's a different story. But right now, even if they go to a neutral stance following this hike, which I don't even think they'll do, it still would be a hard sell to tell me that we're going to come back and go to all-time highs. All right, so that's that. Now let's go to the intraday chart. This is the intraday. You can see on the intraday, there's a couple levels that I'm going to be watching. Let's draw our trend lines. I love the fact that we have these trend lines as potential levels. Look at this trend line here. Boom. Pivot, 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 pivot. So when this decision comes out, if we start trading below here, that would be a negative, right? So if we start spiking lower and we start trading below 403, that would be a pretty hefty negative on the charts. All right. Now, on the other side of the coin, I think you look at this pivot top as a key little pivot point, which is at 408. If we trade above that, we could really test 409 to this level around 410. All right, so again, we're kind of in this little wedge pattern, if you will, and we'll have to follow that. Now, let's take a quick look at gold. I know a lot of you guys are gold bugs like myself, continuing to like gold. Gold, to be honest, remains relatively extended. It is starting to consolidate. I love gold midterm, meaning that over the next 3, 6, 9 months, I think it's going to break all-time highs. But at this point, I have no directional bias going into the Fed. If anything, if I had to choose, I would say look for a pullback in gold. All right, we do have the larger pattern, bullish pattern, but short term it's extended. I think you pull back first and then you race higher and break to the upside. All right, we can quickly look at a couple other things. Obviously, Bitcoin is something on everyone's mind here. Bitcoin, again, you had the fake breakout right there, reversal. Now we're kind of hovering here. The only thing on Bitcoin I'm focused on here is that we're going to be watching this level, 22,340. If we break below that, that would be a negative. You'd have to think that we're going to go test this level. That's your lowest point of the consolidation, 2-candle consolidation low point. That is where the line in the sand is for Bitcoin. As long as you stay above that, technically speaking, you could continue heading higher to 25,000. Okay, really a little bit above 25,000. Okay, yeah, it's not a pretty consolidation pattern, that's for sure. But again, it is still consolidation, even though it's a weak consolidation pattern. All right, natural gas is on everyone's mind. I am long natural gas, absolutely. It is getting flushed today. There's no doubt about it. The positive on it is you're coming into major support here just below $2.50. But look at this oversold move here to the downside, almost a straight move down from $7 to $2.50. That is remarkable in terms of its downside move. All right, so again, natural gas is not going to really move on the Fed. I think that's important to recognize. But the fact of the matter is that we have to keep in mind that ultimately that an oversold chart at some point is going to bounce. The Fed just probably won't have an impact on it. Again, the reason is, by the way, the reason natural gas is in such a hurt right now is that you're getting funds that leverage themselves. When we were trading up here, when it was trading up here, they were over leveraged long because this was going to be such a nasty winter for Europe. It was going to be crazy because Russia was cutting off supply. And ultimately that never came to fruition. And so they're all getting liquidated on this drop. So that's why the drop is so nasty. What you have to do is if you're long natural gas, and hopefully you're long in the lower end down here with me, then you just have to wait it out. Whenever the liquidations are done, it should snap back quite a bit and pop. All right, guys, just a heads up. We are just basically a couple minutes away from the Fed decision. Let's rock and roll here and see what we have in store. Again, we will continue to kind of monitor here and see what the decision is. But again, look for the market reaction. One of the things I stress to my traders is that you don't have to know what the decision is. All you care about is the price action. And what I mean by that is, if we go back to the spiders chart here, is that the price action is going to tell you how the market is taking it. Were they hawkish or were they dovish, right? And if they're hawkish, the markets are going to sell. If they're dovish, the markets are going to rally. Whatever they say is somewhat inconsequential at that point in time. All right. So again, let's watch and see how things go. Right now, the S&P is trading down just a little bit here. We're literally a minute away from a minute and a half, make that a minute from this decision. And again, let's watch and see. All right, I'm going to kind of keep my wits about us. Don't forget to like and subscribe to the channel. I'm going to do more of these live streams as we get further in. Let's see what, again, the price action is coming in. Look at this little pop ahead of it. This is the 10-minute chart of the spiders. So right now you're getting shorts to cover. That's why you're getting this little pop ahead of the decision. Shorts are getting nervous. All right, let's see what happens here, okay? And again, let's see, again, where things ultimately go, where this market is going to make a move to. I'm interested myself. Lastly, let's take a look at oil before this decision. Look at the drop on oil mirroring natural gas. Everyone was bullish on oil just a few days ago that I was watching on like CNBC and these other stations. I didn't see it. We kept on hammering on this upper level. I still think oil goes down to $65 a barrel in the not too distant future. All right. Markets are coming back in a little bit here as we're waiting on that final Fed decision. Let's get the party started here. Oh, here we go, guys. Here we go. Markets are selling. Fed hawkish. Initially hawkish reaction. Markets are selling. Yep, look at this. Beautiful. There's a nice little dump. There's a nice little dump here. Look at where we went. We went right down to that line that I was talking about. This is the power of technicals. This is why every single morning I love getting up and looking at the charts, because look at where we went to on the low end. We just went down and kissed that line. Holy cow. Markets, again, so far not a massive sell-off. Here we go. Now we're starting to see a bigger sell-off, bouncing back above that line. Watch this trend line, guys. This is the trend line to watch. Do we close below it? Do we close above it? That's going to give you your bias. We're back above it right now, okay? 50 basis point. Whoa. 25. Yeah, 25. 25 basis point right there. Look at the market rally back up. I'm not even watching CNBC. I don't even watch that stuff. I watch for the reaction. Clear and simple reaction right here. Okay? Yep, the Fed remaining pretty hawkish. They raised Fed funds rate by a quarter basis point to 4.5%, from 4.5% to 4.75%. But look at the market. It never really got below here. Now it's starting to push up. Where's your resistance point? Let's follow the resistance. Here's your line right here coming up, 406.42, 406.42. That's your line in the sand here. Let's watch this here, folks. See if we can push up into it. Nope, starting to come back in. So far, minimal reaction on the Fed decision. Quarter basis point hike to 4.75 on the Fed funds rate. This is where I get really kind of like zoned in, where I'm just watching and I'm scanning. Let's take a look at Apple. Apple initially dipped right back up. Let's take a look at Bitcoin. Bitcoin popping. Interesting. Initially dropped, and now look at the pop you're getting on Bitcoin intraday. Not a big pop, but a little bit of an uptick here. Let's go back to the daily chart. Remember, on the daily chart, the only thing on Bitcoin that matters is this area right up here. Let me put a line in right here. Okay? Bear with me here. That line right there, that's the line we want to follow. So as long as Bitcoin's between these two levels, there's nothing new here to report. It is what it is. Pretty minor. Markets are starting to sell again. Let's go back to the spiders. Flipping back through the spiders here. Going to the 10-minute chart, we're starting to come down. Watch this trend line down here. Again, right around 403.20. Thank you, Pseudo Crypto. Appreciate that. So again, 0.25 basis points or 25 basis points. Let's take a look at Tesla real quick. Spiders are coming down to that level. Markets are starting to sell a little bit more here. We're seeing pretty much all assets coming in a little bit. Nothing crazy. Even Tesla's not selling much on the 10-minute chart. Daily chart remains somewhat extended right up into this 175, 180 resistance line. If it breaks through that, you're going to go to 200. Let's go back to the dollar. What's the US dollar doing? Yeah, look at this. So see how the dollar popped and is popping up? That's pushing the markets down. So again, remember, dollar up, asset prices down, and dollars popping right here. Look at this little pop right here coming in. And so if we flip back to the spiders, my charts are even lagging. You can see the red corresponding candle. Always remember that. Right now, markets trade inverse to the dollar, the US dollar. Inverse to the US dollar. All right? But again, as long as we don't take out this blue line on a closing candle basis, honestly, so far, it's nice price action whipping, but it's not anything to write home about. Let's go to gold real quick. Gold selling, right? We should all assume gold would sell. If the dollar is going up, gold is going to sell. That's exactly what you should see happening. All right. Now, again, it's not a big sell. And again, keep in mind, the dollar's not going nuts here. Maybe it will on the statement when Jerome Powell gives his press conference. But right now, it's minimal. Look at the size of that move on gold right now on the daily chart. It's so minimal. Let's flip back to the spiders. 10-minute chart on the spiders is still stuck inside of this level here. Yep. So as far as I'm concerned, nothing to worry about yet on the markets dumping. There's no panic yet in the markets. This line is holding right here. You can see we're well above it right now. So far, and again, it was exciting when it came out, but as a trader, I look at this and I say, okay, so far this is a non-event. Now the question is, once Powell starts talking in his press conference, does he say something that freaks the market out or causes a rally? Right? I think that's the bigger question here. So right now, I mean, look at this. We basically haven't moved since the previous candle when all is said and done. Now, again, that could change. Let's keep an eye on the dollar. I want to go back to Bitcoin. Bitcoin was popping up, came right back in. Now it's starting to sell a little bit. But again, same thing on Bitcoin. Go back to your daily Bitcoin chart. The only thing that matters, 22,340, and this high here, 23,840. So there's basically a 500-point differential here on Bitcoin. That's what you're looking at. Okay? Very cool, guys. All right, let's see what else. You guys can throw out a few questions for me if you want me to look at any charts. I'll do a little bit more time, another 5-10 minutes. Let's rock and roll. What do you guys want to look at? Let's talk some charts here. Thank you, and I appreciate the kind words, guys. Yeah, the euro is still holding up. Yep. INJ-USDT, sure. INJ-USDT. I honestly have never looked at this one before. Ooh, that's had a nice run. That's a nice run right there. But look at this. I want to show you this. Check this out. This is where TA rocks. So look at this pivot low right here. Drag that trend line across. Look at what you're right into. Pivot point right here, which kind of matches right over here as well. And then look at where we are. So that's actually into resistance on this INJ. And again, I've never actually looked at this crypto before in my life, to be honest. But that right there just shows me that it's into resistance. Okay? AMD, yeah, let's look at AMD. So AMD reported good earnings. Look at the pop. Here's your short level, guys. Gap fill right here. I even have an alert on my chart set for it. Gap fill, $84.50. We're only $2.25 away from there at this point. That is a short to me. Major gap fill, big move up on AMD. That is a nice little level right there. Let's take a look at Ethereum. Ethereum is coming down just a little bit. I was just talking about this on Rice Crypto, that if it breaks this upsloping trend line, there's a lot of downside to the 1320, 1325. Okay, let's look at Solana here real quick. Solana breaking this wedge pattern, that's very bearish for Solana if it holds here. If it rescues itself by the end of the day, then it's okay. But right now, that is not a good thing right there. All right. So again, this Solana chart should definitely be a concern. Number one, you had a failed breakout, right? It closed above this wedge line and it failed. That's never a good thing. And now you're breaking to the downside. So be a little careful there. Markets are starting to, let's take a look at the spiders. Let's keep an eye on the spiders here. Looks like we're starting to push up now. Oh, look at this. Markets are now, the shorts are starting to get nervous. This is where the shorts start to freak out. Look at this market move, starting to push up. Target price, 406.50. 406.50 is your target price here. That's going to be resistance. Let's see if it gets up there. 406.50. And we're now backing off. So that's resistance. 406.50 resistance. Support is 403.25, give or take, on the intraday 10-minute chart. Love seeing almost 4,000 people in here. That's fantastic. Let's look at FedEx real quick. Let's see what we got on FedEx, guys. FedEx, beautiful day on FedEx today. Love this price action. Look at this on FedEx. Where's the gap fill? Look at how close it is. So you're coming into resistance at 204.50 on FedEx right there. Amazing gap fill from all the way down here. And again, that would be your area right there to watch. So that'll be resistance on FedEx. Also, keep in mind this trend line. Look at this. This is, oh my God. This is why I freaking love tech analysis. Because not only do you have a gap fill, but look at the downsloping trend line that converges with that level. That is amazing. Absolutely amazing. And so what that means, remember, folks, in terms of education, when two major trend lines converge, it's like an epic resistance level. So basically 204, 205 on FedEx is going to be epic resistance. Epic resistance. Okay? All right, I see a couple other questions. Amazon, rocking it. Let's see what we got on Amazon. Spiders, again, are down 83 cents on the day. Let me get rid of that little measured move there. Yep, Amazon's up a little bit. Amazon should actually trade up here. There's a gap fill up here. I wouldn't go long at this point because they have earnings tomorrow after the bell. But if it does trade up into this gap fill, I would consider a short at 111. 111 would be the spot. Let's look at Polkadot here. Yep, Polkadot's not really doing much today, just chopping sideways. Jumping back to Bitcoin. And I know I'm flipping through real fast, guys, but there's a lot going on. I want to keep everyone kind of in the loop as best I can. Yep, Bitcoin just fractionally lower on the day. Spiders fractionally lower. Not much going on here for sure. Pretty darn quiet. Let's go check on what else did I saw Boyle. So Boyle, again, never analyze. And this is going to be the lesson for the day, guys. Never analyze a double or triple ETF. Remember, all double and triple ETFs will always go to zero. Always. Now, it just takes a matter of time. But remember, what happens to double and triple ETFs, there's depreciation based on the fact that they're double and triple of the underlying asset. And eventually, they're going to all go to zero. So if you're playing a double, you need to play it short term. If you're playing a triple, even shorter term. So never tuck away double and triple ETFs in retirement accounts or any long-term account. I will guarantee you will lose money. Ooh, Spiders popping up here, only down 50 cents now. Spiders are popping up, only down 50 cents. Jerome Powell, 20 minutes away from talking. So what you want to do is, if you're looking at natural gas, which is what Boyle is a double off of, or UNG, you want to go to the actual commodity. And the actual commodity, to me, has a lot of support down here. Right here, 247. Now, we're not there yet, but 247 is a lot of support. And then even below that, there's more support down here. And look at this line on this, by the way. Look at that trend line. That's at 225, though. That's another 10% lower. But right here and here, there's a lot of support on UNG. And again, nasty day today. Natural gas down 8%. It's not a pretty move, but nonetheless, it is a move. And it is coming into support. Let's look at Meta. Meta reports earnings after the bell today. It's so close to this resistance level. I think it could pop a little on earnings. 155 and change would be your resistance level. If it gets through that, you're looking at 167. But honestly, I would consider a short at 155 to 160. I would start accumulating a short there. And again, look at this pivot low here. And again, this is so important, right? This level, look at all these lows. And when it hits like this and finally breaks, and it broke right here, right? When you retrace into that level, that's going to be major resistance. I mean, this is TA to the nth degree. So again, what this was showing us is that this was major support. Every time it hit that level, it would bounce. When it breaks, a support level now becomes resistance. And that's the beauty of it. So support becomes resistance. That means this level is now major resistance, 156 we'll call it. Maybe it could pierce up to 167, but I don't foresee it going much past that. All right. So again, keep an eye on that. Let me see what else we have going on. I'm going to flip back to the spiders, which continue to be pretty strong. Let's take a look at the intraday. Look at how close we are to this upper level right up here on the intraday. So now we tagged the lower level. Now can we tag the upper level before Powell even comes on and speaks? Like, think about that. Support and resistance may get tagged on both sides even before Jerome Powell has a chance to even utter a word at his press conference, which is now about 18 minutes away. So that's pretty cool to think about too. All right. And again, we're just coming down off of that level just a little bit as the markets are now basically going into consolidation mode as we get into waiting for the Federal Reserve here and seeing what they have in store for us. So again, pretty wild stuff here. Absolutely. Let's go to Bitcoin again. Let me just take one more gander here. We'll look at Matic. We'll look at XRP. I'll look at both of those. Thoughts on Coinbase stock. So Coinbase to me is overbought. I am neutral to negative on Bitcoin. I still have a long on Bitcoin in verified investing crypto. But if it gets above 25, I'm exiting that long and probably shorting Bitcoin. I have a short signal on Ethereum, a short signal on Solana, a short signal on Avalanche. We're in the money on all of those at this point. Let's go to Cardano real quick. Then we'll look at Matic, and then we'll look at a few of these other ones. Yeah, nice little move on Cardano here on the 10-minute chart. Let's go to the daily. Daily still could see upside to about 42 to 43 cents. That's going to be where I see a major resistance. Look at the channel. the two parallel lines. That's the parallel line plus this level, two converging major trend lines. That's going to be some resistance there. Okay. So again, just keep that in mind here. I'm doing a few little odds and ends here on the side, just kind of looking over some positions that I got going on here. Let's look at Matic real quick. Yep, Matic not doing much as well. You had this down sloping resistance line right here. We pierced it briefly, but that again is holding underneath. Not much going on there as well. Thank you guys. I appreciate the kind words. Litecoin, let's take a look at Litecoin real quick. Ooh, Litecoin tagged this resistance here today. So I was actually contemplating a short on Litecoin. I had a $100 even number. It hasn't pierced it yet. But the only thing is I know they have one of those like halving type events coming up. And so you may want to be a little careful around there. And so I wouldn't necessarily say that that's a great trade. I would just let it be and let it figure itself out. And then we can always go back and maneuver at that point in time. Let's go back to the spiders one last time here and see what we got. Spiders got close to resistance, now starting to pull back as we're getting ready for Jerome Powell's comments. And again, folks, that is some pretty darn good stuff. All right, 215, awesome stuff. I'm going to get going, guys. I'm going to do more of these. Please like, please subscribe, pound that like button, do whatever you got to do, share the stream. I'm going to do more of these. The more people watch, the more I'll do of them, get you guys informed on the charts. I'll teach, I'll do whatever it takes. You guys, I love you all. Thank you for coming out today. And again, take care, be safe, let's have some fun.